Amit Dalal of Tata Investment Corporation joins us now, and in just a while from now, Rahul Mohinder as well is sitting by, so we'll speak to both of them. Amit, hi, afternoon. What's the call now in the market? 5,500 is where we're pretty much stabilizing at for now, at least.
Yeah, the market showing tremendous resilience. Last week we were all looking and speculating on whether oil will cross $100, and 98.99 the market oil resistance used to come in, and thereafter one felt that 5,500 and 98.99 would be a good level. Now oil is above $100, it's 103 for 9x, not for Brent, and we still have 5,500. So in that context, I think the market is showing a considerable strength, and perhaps the speculation is that this Libyan crisis will not escalate into a oil problem and may resolve itself on a political level within the country itself, and we may go back to seeing lower prices of oil. That's one way of looking at the 5,500 level. And the other is, which I've been hearing from the system, is that the options market has been very active in the last month or so, and the carryover, the puts and calls that have been written have moved this market to a very tight range, and therefore it's very difficult for the market to break that range because of the volume of the outstanding options on 5,600 plus and 5,200. But that's not a confirmed information from my side, that's what I've been told.
Amit, you don't track stocks, so you don't comment on stocks specifically, but anything you'd like to say about this Hero Honda deal and the price at which it was struck?
If I'm not mistaken, and if my memory serves me right, when TVS Suzuki went through this 7-8 years ago, that was also at a remarkable discount to market price, and I could be completely wrong, but it was at 10 rupees as far as I know, when the market price was 70 rupees. At that time TVS was a 10 rupee stock, and these are perhaps contracts and clauses which are inbuilt into their arrangements when they get into the partnerships X number of years ago, and in both cases it would now allow the Japanese companies to compete and set up facilities which would finally be a part of the Indian markets, which they came in as a partnership in the original instance. So it may be something to do with their contracts.
We were speaking about this earlier, that it would be prudent to accumulate, some of the sectors that don't have too much of a downside from here. Would infrastructure be one of that space?
Well, I mean, that's something that since the time of pre-budget this discussion has been on, whether the direction of the government in its execution will allow infrastructure companies to again perform the way they did in the past, whether their order books will grow, whether they will be able to get the right type of orders from the government, with construction, road construction as of course the primary space which you would like to see something happening. It's a little difficult right now for the government to do anything other than manage its situation. So I'm not sure that people will look at this space on a very quick note right now.
What's your own sense about the market, Amit? Do you think we have a bottom in place at 5,200, and now is the time for the time consolidation, and eventually we'll come out of it in the next couple of months, or do you think it's premature to make that conclusion?
It's slightly premature, mainly because I think that the lag effect of this high interest rates and inflation is not yet built into our models for next year, and therefore when we see those downgrades coming into those models, how much the global investors will look at this as fair value or perhaps would want the market to be cheaper is only something we might come to know in the middle of the first quarter of the next fiscal year. In terms of the fact that yes, we have corrected from the top, and therefore there is a 5,200 bottom right now, which is a very strong bottom in my view, and especially now that this market has not fallen. I mean, given the circumstances we have around us today, this 5,500 is a complete surprise. I mean, it should have been somewhere around 53, 5,400 this morning itself, which did not, and therefore you could make a case that the bounce back will be pretty sharp if the Libyan crisis is solved and oil goes below $100 to $92 or $95, like you were saying just now. But I'm not sure whether that will remain a buoyant market for long. I think you will see downgrades in the first quarter.
Amit, what's the big fear according to you for this market now? I mean, is it FI outflows? Is it crude? Is it earnings downgrades? What do you think can jerk it back to 5,200 or even lower?
In the immediate instance, it would be oil. If oil were to shoot up against the current situation which we have in front of us and were to go, that is the 9x would go up even above 110, then I think this market can come down very sharply. Over the next 3 months, I think one of the good things in this fall is that all the troubled sectors have corrected very sharply. Real estate, telecom, I won't name the rest, but many of them which I would consider troubled companies, and the ones which have good businesses like technology companies, pharma companies, are still not really much lower than where they were at 21,000 index, except banks. So unless there is huge FII selling, for the market to correct down to 4,800, it's very difficult just on the outstanding positions. So if there is going to be a big fall, it's going to be on the back of FII selling in the next leg.
What about this space? We're hearing of client spends improving, with not just with the frontliners, but even the smaller guys in the IT sector. Is this a space that you like for the medium term?
Yeah, I think barring the taxation issue that has come up, I think the Western Hemisphere growth and the improved growth scenario which is in front of us for 11-12 has always historically spelled improved business scenarios for all our IT companies, and even though we have had a very good run up in IT sector all of last year, I think they'll continue to remain our steady performers for 12-13 also. Earnings growth will be very much within line of expectations. It's one sector which perhaps will not suffer a downgrade in earnings.
Some of these
except for the taxation.
Okay. Some of these education, aviation companies, there's some talk that they may get infrastructure status. Is this just a sentiment boost that we're seeing on the stocks, or do you think this would make a significant difference?
I think I completely agree with Uday, and the business of the company is more important. How you classify it and how you give money to the company. It's more a banking issue, it's more a lending issue. How the government sees it, and sometimes when the government starts looking too closely to a sector like we have seen in the case of telecom, it does more harm than any good. So I am very happy if the government does not observe the growth in a certain sector and it continues to grow on its own.
Okay. Amit, in lieu of the way global crude prices have been shaping up, how would you really approach some of these, oil and gas companies, ONGC, Reliance Industries? What is the take now for the medium term?
I think we have to differentiate Reliance with ONGC and the oil marketing companies, because the oil marketing companies and ONGC have to depend a lot in terms of the subsidy sharing formula which the government deals with every year. But if you see the historical situation, I think irrespective of oil price, finally the sharing is such that these companies are able to show some profit and there is some dividend distribution that comes from oil marketing companies. Where ONGC is concerned, of course the FPO is in front of us, so the government will have to see to it that their investment case remains in ONGC, so the profit growth should be respectful over there. Reliance, I think, will be a big beneficiary of any improvement in GRMs globally, and the petrochemical cycle which is on the upsurge for many of the products, and therefore one can expect it to show substantially higher margins and profits in the quarters to come.